Another week of relentless selling in the markets, but hang in there because I think we're going to see a small market bounce this coming week. So let me start with the SPY chart. This is the SPY daily chart. We always want to analyze the S&P 500 index first because it acts as our guide, because most of the stocks individually are going to follow the movement of SPY. So the first thing I like to look at on the chart is I like to look at a VWAP-Q, which is just a VWAP anchored to the beginning of each quarter, which is this white line here on the screen. And as you can see, we are currently below, we are trading below AVGO. And the way I read this is very simple. If price is trading above AVGO, like here, I would have a bullish short-term sentiment, which means that any kind of dips, I would be buying. And when price is below AVGO, I have a bearish short-term sentiment, like here. So any rips, you'd be shorting into it or selling into those rips. So as we currently stand, we are still below AVGO. Therefore, I'm still bearish in the short term. The next thing I like to look at is the simple moving averages on the daily chart. I always have the same four on my screen. It's going to be the 50-day in blue, the 100-day in gray, the 150-day in green, and the 200 in purple. And we traded all the way down to the 200 moving average. And luckily it held. We held it now for 4 days. See, we have a touch here. 1, 2, 3. Gap down below it, but recovered it intraday, making it 4 days now that we've held the S&P. So the longer a support level holds, the higher the chance we bounce from that level. So how high do I think we're going to bounce? I think we're going to bounce as high as this confluence here between the 100-day moving average and AVGO. That would be a bounce of about 3% or so. I think this is totally possible. I don't think the 150-day moving average is going to provide much resistance because we were able to close above it this week on Wednesday. And actually, there's another thing that makes me think we're going to see this bounce, and that's actually going to be some analysis from 2018, which was a trade war that happened in Trump's first term, right over here. This is between America and China when Trump put tariffs on China, and China was retaliating. So in this one, from the all-time highs, we dropped a total of 7% and 15 bars, 21 days. So after this drop, the market bounced up to around the 100-day moving average for about 4 bars or 6 days for 3.7% bounce. If I go back to where we are now, we dropped a total of 7% in 16 days, very similar to what happened in 2018. And like I showed earlier, we could bounce here 3% in 6 days or 4 bars. So that's just something else I looked at, something else that confluences with what I'm seeing on the technicals, and something I'm expecting to see next week. So did I go long here? I did not, because we are still trading below AVGO, and the market has been selling harder than I have seen in this bull market so far. This bull market started in 2023, and even when we had this dip below the 200 moving average on this sell-off in late 2023, I mean, buyer stepped in at the 100-day, bought it up to the 50. Buyer stepped in at 200, bought it up at, to the 50. Buyer stepped in, bought it up. Over here, this is in April 2024. We hit the 100-day, it consolidates before recovering. Even we had the sharp yen carry a scare in July and August of 2024. We hit the 50-day, stayed there for quite a while before heading down to the 150 and recovering swiftly. I haven't seen anything like that here. This is just Sell down to the 100, sell down to the 150. Any kind of bounce was immediately followed by a drop. Sell down to the 200, and we stay here for a while. So I don't think we're out of the woods if we get a bounce. I'm taking the opportunity to scale out of my longer term swing trade positions. And the purpose of that is to hold more cash reserves for trades if the market drops more, and for to add to my long-term investment positions as the market drops more. How much lower do I think the market could drop? Well, let me switch over to this chart. So we were able to bounce off of this previous all-time high strong horizontal support level at around 565 on Friday. So that was one of the targets I was thinking of. But if we break down below this level, I could see us having a 10% drop to 552, or even a 15% drop at 521. In 2008 and 2018, with the first Terraform, the market eventually did drop a full 20%, which would put us at around SPY at 490. I don't know if I'll have a 20% drop, because statistically these happen once every 5 years, and we just had a bear market in 2022. So I'm leaning towards a maximum drop of about 15%. So that'd be SPY at 521.50. Now I'm going to go over a brief fundamental analysis. These were the reports that we saw this week. We had ISM Manufacturing PMI and ISM Services PMI. Both came around the forecasted level, but more importantly, both read a reading above 50. A reading above 50 on these ISM reports means that these industries are still expanding and not contracting. So that's good. We want to see that. That means the economy is still growing. On Friday, we had a very important report, which was the unemployment rate, which came in just slightly above forecasted, but about forecasted at 4.1%. So we're still sitting at a really low unemployment rate, which is good. I believe employment is going to be, if it starts seeing weakness there, it is going to be the knockout punch, I guess you could say, for the market to really head lower. Next week, we have the JOLTS job openings forecasted to be increased from 7.6 million to 7.71 million. And we have also our inflation rate, which is forecasted to actually drop slightly to 2.9%. This is going to be, of course, a very important reading as well, since it dictates the FOMC interest rate decisions, and it gives a bit more insight into how our economy is doing and how prices of goods are being affected by certain policies. It's still very early because Trump just started his term, so we might see his effects later in the later months. But so far, it looks like they're forecasting a slight decrease, which is good. We want to see inflation come down to the target of 2%. And then lastly, we have PPI, month over month, just another way to read inflation, which is also forecasted to drop 0.1% to 0.3%. So I do run a free Discord community called Market Victor, where I post stock valuations for my long-term investors. Basically, I track over 30 stocks in the S&P 500 that I believe are great companies with good fundamentals, and I track their fair valuations. So that way you know what price is a good price to buy a stock at for your long-term portfolio. So we did have 4 earnings on companies I tracked this week. They were Broadcom, Costco, Target, and Viva. So I'm just going to briefly go over what those valuations were updated to, and just so you can get a look at how I present this analysis in my Discord community. I'll put the link in the description. It's completely free to join. So I'm going to start off with Broadcom. So Broadcom has an updated fair value of $187 per share, making it fairly valued and also making it a good time to potentially invest in. They have a fundamentals rating of 2 out of 3, which, feel free to pause the video and read on what these metrics mean. They're ranked number 8 in the S&P, and they have a bullish technical outlook. So my technical outlook refers to a longer term outlook, and I believe Broadcom is still in a bullish uptrend for the longer term. So next we have Costco, which is one of my favorite stocks in my portfolio. Um, I have an updated fair valuation of $830 per share following their earnings release. So unfortunately, it keeps it as overvalued rating. But I do want to show you something on the technical side when it comes to Costco. So everything in the stock market is nuanced. You can't just look at a fair valuation estimate and say, okay, done. Or you can't look at the technical chart and say, oh, it's at the 200 day, done. You have to use your judgment and you have to do your research in order to make your decision that you're comfortable with. Everyone's different and you got to find what works for you. So this is how I'm looking at Costco because we saw a really nice drop, about 6% in Costco on Friday. And it's hard not to want to take advantage of it. This is how I would do it. I have a current position in Costco that I've been holding for a long-term position, and I do want to add on these kind of drops. So why do I want to add? Because we hit and held a very strong 100-day moving average support level that Costco has been respecting for a very long time. And I'll show you. So we held it on Friday. Costco dropped to the 100 moving day average in late December, early January of this year and held it. Costco dropped to the 100-day moving average in October of last year and held it. Again, August 2024, held it. April and May 2024 and held it, etc. I think you get the idea. So the 100 moving average is a very strong support level, which means even though it's overvalued, if I add a share here at 964 and my average cost basis stays below $830 per share, I will add to my position here since it's at very strong support. Because overall, it's as if I have owned shares of Costco below its fair valuation. If you don't have a position in Costco and you want to start one, this would be a good time, but deploy your cash in chunks. Take a starter investment here because, again, there's a chance the market could head lower and Costco would head lower with it. So maybe if you want 4 shares of Costco, buy 1 share now, hold the rest of the cash for those 3 shares, and wait for a potential market drop. If the market doesn't drop, well, hey, you bought a share and you own a share. That's great. If it does drop, that's also great because now you can buy Costco at a cheaper value. And that's how you want to manage your investments. Never all at once, always in chunks. And I'll finish up the segment going over the last 2 valuations. We have Target with an updated fair value of $134 per share, which makes it undervalued. However, I do believe it's in a bearish longer term trend. So when a stock is in a bearish longer term trend, you don't want to buy all at once. You definitely want to buy in chunks because it's possible the stock will make lower lows in the longer term until we see a trend reversal. And lastly, we have Viva Systems. Viva is a medical CRM company. So think of Salesforce with their CRM software for businesses. Viva basically specializes in healthcare, in the healthcare industry, and they do their healthcare systems. So it's a very good company, very good fundamental ratings, very good balance sheet, and their fair valuation was updated to $203 per share, keeping it overvalued. However, it is also in a bullish longer term uptrend. So if Viva can drop with the market and hit this fair valuation of 203 or below, in my opinion, that would be a good time to add. Of course, I hope it goes without saying, this is not financial advice. Please do your own research. This is very important for never follow someone just because, take the information. It could be valuable information and apply it and let it help you make your own decision. Now I'm going to go over my active trades. I post all of my trades live on my Discord server. I also summarize my trades every week and keep a win rate tracker for full transparency. I am mainly an option seller. Most of my trades are going to be selling options in the wheel method, like selling covered puts, and then if I get assigned, selling covered calls. I do swing trades sometimes, and I am actually working on a trade signal for those, but is still in the testing phase, but it's getting closer and closer to being finalized, and I'm very excited about it. But so once I never want to post anything that I wouldn't use myself or I don't use myself and that isn't tested to be profitable. So once I'm able to do that, I'll definitely share it because my goal here is to help people become profitable, traders and investors. So I do have four open covered puts on NVIDIA. I have two, they're also called CSPs, by the way, cash secured puts. So I have two CSPs at the $132 strike and two at the 120. So unfortunately, I opened these puts right here, right before the DeepSeek news. So originally these strikes were actually at 135, I think, or no, 138 and 132. And I did not close for a loss. You know, the beauty about selling options is you have a lot of flexibility through rolling. So I was able to roll these strikes down over the past month or so to now sitting at 132 and 120. The 120 I'm pretty comfortable with. I wouldn't mind getting assigned here. I think this is a good price. The 132s, however, unfortunately aren't so great. So potentially what I'm thinking of doing is if we get a market rally next week, I plan on most likely closing out one of the my 132s probably for a loss, just so I can get that cash back and bring down my average on Nvidia if it keeps dropping. I could probably roll down my 120s maybe to 118 or so, and then if the market really does get that big drop below the 200 day, I can sell some Nvidia CSPs at like a 90, 95, which if you want to think about it this way, if I get assigned at 120 and two at 120 and one at 132, that's 300 shares at about, I'm just going to assume about 125 cost basis. And if I sell one or two more puts at 95 and I get assigned there, that'll bring my average down from 125 probably down to like 115. So this is how I'm looking at my current open trades. I also have two uh, CSPs on Google at the 170 strike. Oh, by the way, my Nvidia puts expire at end of this month, and so do my Google puts. So my Google ones, I might also close these out if we get a market rally this week, just because I don't like how Google is able to break below its 200-day moving average like this. And if the market really will continue selling lower, then this stock will continue lower too, maybe even down to this 100-day moving average on the weekly chart at around 152. I don't want to hold. I'd rather close it for break even, get that capital back, and sell Google puts at that lower price instead. So that's my plan with these ones. I was also able to close uh, several CSPs this week. So I did take a Broadcom CSP at the 160 strike, which expired on Friday. I did it not because I'm playing earnings. Broadcom has earnings this week. You never want to hold the trade over earnings, but because I genuinely wanted to buy Broadcom 100 shares for my long-term portfolio. That's why. And earnings provides an opportunity for you to sell options with a higher than normal premium, and earnings have the opportunity to drop or raise the price a lot after following the earnings report. So I sold at 160, hoping to get assigned, and I did not, which is fine. So I kept the premium and the close of position for a profit. I had a Tesla CSP at 255, which I did want to get assigned as well because I would have loved to own 100 shares of Tesla at 255. But the market recovered on Friday, and my 255 CSP expired worthless, and I kept the premium there for a 100% profit trade. And I did take one NVIDIA CSP at 97 this week, which I closed in one day for about 85% profit. And just to finish this off, on my screen I have my trade summary that I post on Discord, and these are the trades I just talked about. So far in 2025, I'm maintaining a 100% win rate. 14 out of 14 positions that I've taken and closed have been for profit. Also, I don't post my live trades to copy. I post them for transparency. And so you can get an idea of what I'm looking at. And if you ever have questions on why I took a trade, you can always ask me. I love to collaborate and help people and answer questions. So if you see me take a trade and you don't know why or why it shows a certain strike or expiry, feel free to message me, tag me in Discord, and we can talk. I'll finish off my video going over my trade signals. I do also post buy and sell signals on my Discord server for free. The intention of these signals is not to follow blindly, of course. This is to be used as a checklist item in your own trading system and give you that confidence to take a trade. Uh, I designed these signals for option selling purposes because the average time that a buy signal will be valid for is up to 2 weeks, and for sell signals up to 1 week. So the idea is that if you see a buy signal in a stock that you are already looking at and considering to sell a put on, uh, you could take action when you see that buy signal, sell a put, and then have an expiration of 1 to 2 weeks on it. And that way, perhaps you'll be able to increase your win rate and time your trades better. You can take directional trades on these. I have used them like that sometimes. They're not as consistent, but they are still profitable that way. So it's up to you how you want to use them. I'll show you some of the results right now. So this week we got a buy signal on Procter & Gamble, ticker PG, and since then we have seen basically profit the whole time. So if you've taken a directional trade, let's say you hold a trade, a swing trade for a week or less, you have opportunities to close this trade for a profit this week. If you sold an option, you can maybe have your strike down at 168 or so. I don't know, however much premium you want to have, and set an expiration of 1 to 2 weeks. If you had a 1 week expiration, you would have stayed in profit. So that's the only buy signal we got this week that I could track. We had buy signals coming on Friday, which obviously I can't show the results of, but I will show you what those signals are, and that way you can keep track of them for yourself. For a sell signal, we had Apple this week, and unfortunately for this one, you were in profit only slightly for the next day, but this signal ended up not working out. And that's okay. I'm showing these to you to be transparent. I don't show you only the winners. Not every single trade is going to be profitable or successful, but the name of the game is having more wins and losses, and not only having more wins and losses, having larger wins and small losses as well. So I'll show you the stocks that had signals pop up on Friday. There was a sell signal on Eli Lilly that showed up on Friday. Now, for something like this, a sell signal popping up in a large candle, it could still work out. I've seen it work out. But sometimes when you get large selling pressure like this in one day, the stock can rest for a day or two before heading lower again. So keep that in mind. For buy signals, we got two on Friday. One for United Healthcare, as you can see here, and one for ExxonMobil, which you can see here. Since I'm on the screen, I'll show you an example of a sell signal here. ExxonMobil got a sell signal on March 4th. The next day, gap down. You could have had a profit up to 3% on that short trade if you decided to take it. And if you didn't take the profit there and you held it, you probably get out for break even on that following day. So yeah, I'm pretty proud of these. I worked hard on them, and I hope these help you. I'm going to finish off the video here. So thanks for watching. I hope you got some value from this. Again, I have a free Discord server that's fairly new, and I'm trying to grow it. I'd love to have you in there and, to collaborate, ask questions, and learn with each other. So again, the link will be in the description below, and hope you have a good week.